Sanbonani, hello, how's it? Welcome to the Big Liberty Show special feature. I'm in studio with the one and only Ian Cruickshanks. Before I get to him, just wanted to thank you guys who are supporters of the show, those of you who donate monthly to the show, either through Patreon or, of course, ideally through the Friends of the IRR campaign. That's our crowdfunding campaign at the IRR, where you can donate 90 Rand monthly by simply SMSing your name to 32823, or, of course, finding us online at irr.org.za/join. And it's those funds that help get me into the battle of ideas and obviously get me out and about, traveling to various locations, bringing you the awesome content that you've come to be accustomed to on the Big Liberty Show. Guys, welcome to this Wednesday edition, or not that there's any other edition. This is the show. And as I said, I am joined in studio by Ian Cruickshanks, who is our Chief Economist here at the IRR. Ian, of course, is the gentleman who is going to be crunching the numbers for us today. Remember, there's very important economic data that's come out today and actually yesterday. But Ian will correct me when I bring him on. And essentially, what is this number? What are these data points that we are worrying about? Well, it's the growth. It's the number that charts the growth of the country's economy. You know, are we growing? And if we are growing, is it significant growth? The sort of growth that can get, the over 50% unemployed young people into a job, productive work, so they can get the dignity of an income? Is it the sort of growth that can get the general near 40% of unemployed South Africans into gainful employment and get us back onto a track of becoming a middle income country, a prosperous one at that? But let me not waffle away. And actually, let me introduce my guest. Ian, welcome to the show.
Good to be with you again. Thank you.
Absolutely.
And may I just say right away, this data came out this morning.
Yes.
So we're getting today's comment on today's news.
Fresh off the press, so to speak.
Exactly.
Ian, I'm going to hop right into it. What do we see in this quarter? Is there growth? If so, should we be happy about it?
What is the data we've seen? GDP. What is GDP? Gross domestic product. That is the sum of all goods and services produced and all services rendered in a particular period. For this moment, we're looking at the period, the second quarter, April to June this year. Now, why is it important? Well, because if this then plots how the economy as a whole is doing. Are we in business expansion mode? Are we in job creation mode or not? We'll see in a minute. What we saw was that the change from the first quarter this year to the second quarter this year was a growth rate of 3.3%. And now there's cheering. Look, we're growing at 3%. Hey, but that is from a very low base. That low base in the first quarter was negative, a contraction of 3.2%. Now we've grown 3.1%, so we're barely offsetting where we are now in getting back to zero for the first half of this year. That is not business expansion mode. That is not job creation mode. I think what we have to realize, looks over a slightly longer term and say we're finding it very challenging to make any real progress. If we look at the same period a year ago, what it says is that this quarter was up by 0.9% on the same quarter a year ago. But the previous one, the first quarter, was zero change. So really 0.9 for the 6 months looks like on average it's a pretty below 0.5%. That just goes to show we're not making progress because we're not keeping the economy building at the same rate as the population is growing. So per person we are still getting poorer in economic terms in the South African environment.
Absolutely, and that's the real concern here, Ian, that I have. I've been watching the I've been watching the social media punditry on this particular number, and of course, predictably and rather shallow, in a very sort of shallow analysis, there's a lot of jubilation. Oh, look at how the Ramaphosa administration is bringing us back into growth. But you've made the point, haven't you, which is compared to the last quarter, essentially, before you compare it to the previous year's quarter, but compared to quarter one, if I'm not mistaken, we haven't even reached the zero threshold. It's in other words, we contracted by 3.2% last quarter, and this essentially this quarter's growth has barely even brought us back to the zero mark. We're not getting richer, are we?
No, we're back at zero.
Yeah.
We're back at ground level. We had a brief trip down to the lower basement. Now we're back at ground level. That is not progress, and that is not the way we're going to create jobs, to sort out, to correct that massive unemployment number which you just quoted, and it's going to do nothing to encourage investors that South Africa is an attractive investment destination. We're not going to see a new inflow of foreign portfolio funds, of new fixed investment capital. I'm afraid we're going to stay just where we are, mired in a low to no growth situation for the time being. How long? Time will tell, but I don't think we have the recipe for a really good outcome in the foreseeable short term. Short term, what is that? 1 to 2 years. I think we'll stay around where we are, mired, stuck in a low to no growth scenario, and we have to accept that. And the government has to do something to get something moving. It can be done.
Well, let's look at the data with a little bit more detail.
Yes.
Now, what we often do on this show, Ian, is once we've given out the headline number, we then go behind the headlines and really look at the particular sectors.
Yes.
Because we've been making the point for quite a while.
Absolutely.
On our various shows, including the Daily Friend. Remember to watch the Daily Friend. That comes out every Monday, Wednesday, and Friday. In any event, we often say that there's certain sectors that we needed to watch. The last time we spoke, Ian, we were talking about the retail sector and how it's in a particular slump at the moment. I don't know if you have the data in front of you, but what were some of the key industries that contributed to this 3.1%? And are there any still sluggish ones that we should be worrying about?
The whole economy is sluggish.
Yeah.
That's the first point we have to recognize. I think that we've had a certain upturn in consumer spending. If we look at what's going on in the factory side, what's going on in construction, what's going on in the making of goods, in manufacturing. What we saw yesterday was the PMI, the Purchasing Managers Index. This gives a view of expectations 6 to 12 months ahead of what we should see in manufacturing. Does it matter? Yes. Manufacturing is 15% of the total economic output of South Africa. So what we're seeing there is that the expectations are below on the index, or below for the 50 break-even point. Break-even would say we're expecting neither progress nor regression. We're now down at 45, 5 points lower. That's 10% gap. We've come down. That is where expectations are. They're 10% worse than they were only a month ago. Looking ahead, we're seeing that new sales orders, new production are just have got nothing to go to increase. We're not seeing that stocks are being built up. There's no desire to put stuff on the shelves because we know it's going to fly off there in a hurry. So really manufacturing is really saying it's one that is holding us back. Construction, every week we read of another major construction company having huge financial problems. So if we're not seeing any big new construction, then we're not going to see any big new developments. What I was speaking to was one of the CEO of one of the major construction companies just a couple of weeks ago, and I said, look at these new buildings. He said, yes, but take a close look. There are no more cranes. Why? That would show you that there was development and building going on. The cranes have been completed their task and going away. No new development. No, and this applies to many sectors of the economy.
Ian, I'm going to raise an issue that you actually are quite vociferous about in terms of underlying some of the weaknesses that contribute to the sluggish growth in the economy. Eskom, that's one major facet that you often rail against insofar as it being such an anchor on the South African economy. Quarter one saw, of course, the effects of load shedding essentially drag a lot of the industries down. Luckily, I would postulate, and I'll let you correct me if I'm wrong, Q2, essentially, we had stable-ish electricity supply. Maybe that was also a contributing factor to the recovery, in inverted commas?
To an extent, yes. What is the first requirement in power?
Yeah.
What the users want is a reliable. We're not doing that. We may have been better in the last few months, but over the last year, we've still had a number of brownouts. It must be cost-effective. we're putting up the price by 16 or 17% per annum. That's not cost effective. Manufacturers and miners and agriculturalists cannot cope with that sort of change in a basic cost input. They can't absorb that, and it's got to be reliable, cost effective. We find that in other countries, our competitors, commercial competitors, are not having that. They can plan ahead on a stable view of the power cost input. The other thing going on from there is there's still no confirmation about expropriation without compensation. We're not going to get foreigners coming in with their precious capital and say, I like the look of the potential here. Yes, but I bring my capital in and it may be taken away from me. That is official government policy. I'm afraid that doesn't encourage more investment at all. And I think that our labour movement have made it quite clear over the mid-year labour negotiations that they are not going to be prepared to accept an inflation-based wage increase. They want it up to 12-15%. Well, that's 2 to 3 times inflation. I'm afraid that once again, manufacturers, commercial operators can't cope with that sort of increase. And what's worst is that we're making ourselves non-commercially price competitive. And until we can do that, we're not going to get the growth level that we need to build confidence, to create jobs, to create the ability for people to have a level of decency where they can feed their own family and educate them too.
Ian, as we look to conclude this conversation, let's talk to those who are watching about the outlook.
Yes.
I'm going to ask you to look into your crystal ball and try your level best. And I know I'm throwing a Hail Mary pass at you here, but try and forecast for us what these given these quarterly numbers that we're seeing, where are we headed in terms of the annual growth likely?
Yes.
And whilst you sort of push out that number, what do we do to get back onto a growth path that can at least get us 5-8%?
Excuse me, Sickly. That can I say right away? That's fantasy. But however, a laugh every now and again is something that may help to keep us going. Okay, let's be realistic then.
Yeah.
Let's say, what are reliable forecasters? The Reserve Bank is looking at potential growth of 0.6%.
Oh my goodness.
0.6%. The population's growing at 2% per annum. Well, that means we're all getting poorer at quite a quickened rate.
That's
so
right.
where are the new jobs coming from? Where are the new opportunities coming from? We don't see them there. Is it going to change in the year ahead or the years after that? Until government changes its policy on the sanctity of assets, on the reliable, cost-effective electricity supply, on labour understanding the connection there is between productivity and reward. Yes, we want everybody to be paid more. Hey, but you've got to do a bit more to put your input up as well. Right. Until we can do these, until we can have an assurance that government understands that, until we don't face a bloated public service where there are far too many people doing far too few jobs efficiently, until that changes, a dramatic change, then we're not going to find the new investment which is going to come down to lift us, never mind 5%, to lift us to positive growth on an ongoing basis. What's been done, if we look at the structure of the economy, it could probably withstand a growth rate. That means resources could provide growth of just under 2%. Once again,
paltry.
That doesn't do too much to make the majority better off than they were.
That's right.
And it doesn't cope with the increasing size of the population. So that's why we're seeing in a lot of areas we're getting social upheaval for a number of reasons. But one of them is that there's too little work to go around amongst too few people. That sums it up very simply.
Ian, sorry, just maybe one more question actually, since we're sort of going down this particular path of how do we get the economy to grow. Tito Mboweni, the Finance Minister,
yes,
threw out a surprise curveball.
Indeed.
And in a policy paper, excuse me, I should actually call it a position paper,
yes,
where he argued certain reforms, which lean on the side of being pro-market, of course, were needed, and burst the illusion, the ideological illusion, if I can call it that, the leftist ideological illusion, that somehow the state should be the arbiter of all things in an economy. He is basically making a general argument, a broad argument, saying no. actually small business markets liberalizing to an extent, certain aspects of the economy, especially on labor. We've had that conversation. These are the things that are needed to grow the economy. Now, I know we don't fully endorse what was in that document, but surely there were glimmers of hope in that document.
Absolutely. Having looked at this 6 months of inactivity is all I can say during President Ramaphosa's sitting at the top table for the time being. I would say, how about Tito for president?
Oh, wow. I'm sure you'd love that.
But what we have to say is it's the first rational voice that said, we understand that we've got to compete with the rest of the world. You're not an island afloat all on our own. What do we have to do? We have to do what others are doing, but do it as well or better. That's the only way to get ahead. What does that mean? Free markets. Strip away regulating problems, that inefficiencies, and make sure that we get value wherever it is.
And growth. He makes the point that you cannot have inclusive growth if you don't have growth.
That's right. So we've got to get the economy to grow, and to do that, we've got to be more efficient. We are grossly inefficient. We are not globally price competitive, and until we can change that, what do we have to do? First thing is confidence. Let us make sure that the investing sector, those who are going to build those new buildings and factories, understand that there's an opportunity to create more wealth, to share that, and so complete a circle in which we can all benefit and grow.
Absolutely. Ian, thank you very much. I think I've bothered you enough.
No, you're welcome.
On this wonderful Wednesday. And thank you for watching. I always say this, we have a wealth of resources here at the Institute of Race Relations, and I will bring you them and the voices behind them on the show so that you are armed with not only the knowledge, the information, but also the arguments of how do you build a freedom-loving, market-orientated society, one where there is growth and essentially its citizens are part of that growth, enjoying the prosperity that comes with unleashing the power of the market. Ian, thank you so much for joining me on this episode of the Big Liberty Show. And as I said, thank you very much. Remember, you can support the show by becoming a friend of the IRR. How do you do that, you're wondering? Well, find us online. You can pledge a monthly donation of 90 Rand, guys. That's between 4 and 5 cups of coffee a month. And support your favorite fat boy. Support Big Daddy Liberty. And you can do that, as I said, by finding us online, www.irr.org.za /join. Or alternatively, SMS your name to 32823. Terms and conditions apply, and SMS will cost you 1 Rand. Guys, look out for some of the shows I'll be providing very soon. We're going to be hitting the streets of the various cities across this country, asking you specific questions. Some stuff that we raised here today on whether, for example, you think politicians should run your healthcare, or whether your pension should be used to fund ailing SOEs like ESCOM and debt-ridden government entities like that. These are the questions I'll be asking you, the South African on the street. So look out for those shows as they come out. Look out for my vlogs, of course, where your favorite fat boy chews the fat, so to speak. And, we talk all things social issues, politics, etc., etc. And remember, as I always say on this show, never trust a commie.